welcome. This is Business Morning. Thank you for joining us. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Thank you for joining us and good morning. Well, yesterday was quite significant in Nigeria's oil and gas industry as the President, Muhammadu Buhari, launched the Decade of Gas in Nigeria, which is aimed at transforming Nigeria into an industrialized nation with the help of the gas sector. While speaking at the virtual launch of the project, the President said that his administration would fully utilize the enormous gas resources in the country to uplift the economy and drive industrialization. The Minister of State for Petroleum Resources and the Secretary General of the Organization of Exporting Countries, OPEC, also highlighted the significance of the Decade of Gas Development Initiative. Let's take a listen.
And the future of fossil fuel is at the fulcrum of this conference that has brought together in one room everyone and anyone relevant in the Nigerian oil and gas industry. To underscore the importance of the gathering ahead of June this year, when a holistic approach will be institutionalized, the President of Nigeria is doing the honors of chairing this occasion with the theme, The Decade of Gas.
Our major objective for gas sector is to transform Nigeria into an industrialized nation with gas playing a major role. Remarkable progress has been made to achieve this objective. This includes developing gas infrastructure, promoting domestic utilization of LPG and CNG, commencing the process of commercializing gas flares, development of industrial and transport gas markets, and increasing gas to power.
It's about economics of gas and its potential to leapfrog Nigeria's growth through industrialization, a position the Group Managing Director, NNPC, is at home with.
Nigeria, under the leadership of President Muhammadu Buhari, has committed huge resources to ensure that domestic gas infrastructure reach every corner of our country, to deepen natural gas utilization, support investment in power and gas-based industries, grow the economy, and generate employment for millions of our young people.
If you take the NLNG example, with Train 7 coming on stream, an estimated 40,000 jobs is in the offing.
Saudi Arabia and Dubai use oil to move their economies to becoming one of the best in the world. Qatar has used only gas to transform from a fishing economy to becoming a global gas giant. Nigeria, on the other hand, has both oil and gas. However, Nigeria has thus far ridden on the back of oil for over 50 years. But now the time has come for Nigeria to fly on the wings of gas.
The Decade of Gas will require measurable milestones to be set from the blast of the whistle if Nigeria must catch up in the race to transition into green energy revolution. Bearing this in mind, the Minister of State for Petroleum has made some commitments.
The economic recovery and growth plan of this administration revolves around the utilization of natural gas. The 4 priority areas enunciated in the ERGP are energy sufficiency, transportation, agriculture, manufacturing, and industrialization. The common denominator is natural gas, as it is the major fuel for power generation, transportation, and key ingredient for manufacturing fertilizer, which is required for agriculture.
With the 203 TCF of proven gas reserves, Nigeria has a major leeway, and that has been strongly canvassed at this meeting. The future is now. Olu Phillips, Channels Television News.
Anyway, in line with the federal government's effort in boosting food production in Nigeria, Unity Bank of Nigeria has partnered with relevant agencies to flag off the wet season rice harvest. The event, which was the National Rice Festival, took place in Gombe State, where 12 pyramids of 200,000 50 kg bags of rice was displayed. Take a listen.
One area that the President Muhammadu Buhari-led administration can boast of significant development is agriculture. The last few months have seen the government move from state to celebrate the successes recorded in rice production. They are in Gombe State to celebrate another success story as they display pyramids of rice during the National Rice Festival that took place in the state. President Muhammadu Buhari was represented by Governor Atiku Bagudu of Kebbi State. He lauded the effort of individuals and corporate organizations who have made this possible.
Confidence is returning to the Nigerian economy, and as the governor of the central bank said, private capital is being increasingly attracted to agriculture.
These symbolic events reinforces the massive potential in Nigerian agriculture and encourages more private sector investments in the agricultural value chain.
The host governor, Inuwa Yahaya, describes Gombe State as a fertile land for agriculture.
We could equally advance the cause of our people, whether in processing, whether in marketing and distribution, or whether in consumption. With a population of close to 3.2 million people, Gombe has the numbers.
Historically known for financing agricultural activities and contributing to erecting food pyramids in the country, Unity Bank has partnered with relevant stakeholders to make this lofty dream a reality.
We are one of the key stakeholders. The CBN as an institution is a fund provider, but we are the enablers in terms of collecting the money from the CBN and then doing the due diligence and pass it on for the benefit of the smallholder farmers.
We've taken part in Kebbi. We've taken part in Niger State as well. All this is efforts put together by the bank.
The goal remains to have a nation that is food sufficient and ultimately move the agricultural sector from subsistence to commercial scale.
In all the developments, Allianz Global Corporate and Specialty, a leading global corporate insurance carrier and a key business unit of Allianz Group, has identified damages, disturbances, and ultimately losses from riots, protests, vandalism, or other forms of civil unrest as main political risk exposure for companies, with the ongoing impact of the COVID-19 pandemic likely to drive further activity. In its annual global risk survey, political risks and violence returned to the top 10 risks for the first time since 2018. Well, to talk more on this, Doris Pageant, crisis management expert at Allianz, joins us next. All right, to look at this risk barometer by Allianz, Doris Pageant joins us now, all the way from Paris. Good morning, Doris. Thank you very much for joining us on the program.
Thank you, Chimize. Good morning. Thank you for having me today.
So tell us about the 2021 risk barometer and its findings and why it's important, for businesses.
Yeah, that's true. That's correct. So what we've seen is large-scale terrorism attacks have tended to decline over the past 5 years on a very global level. And we've recorded a significant increase in the number of riots, demonstrations, vandalism. And I think we have been entering a very interesting period of social effervescence across the globe. And just to name a few, earlier this month, we've seen anti-government protests in Senegal following the arrest of a popular opposition leader. Back in 2020, we've seen Black Lives Matter in the US. I think we can also mention the Hong Kong protests. And we can have a look at what we've seen in Chile as well, or the Yellow Vest movements in France. So these protests are driven by a really variety of causes and roots. And this is ranging from the economic hardship to the police brutality. And I think it's key mentioning the role of the social media, because they have revolutionized the political world. It's making it easier for people to organize themselves. And it's making it easier for people to expose the acts really of corruption and abuse of power. I think it's key also to mention the fact that COVID-19 is making only the things worse. And overall, This means that civil unrest are not the main key risk for companies when it comes to political violence.
Okay, Doris, your 2021 risk barometer identified civil unrest as a key business risk globally. Political risk and violence returned to the top 10 risks for the first time since 2018. What are the key reasons for this rise?
Really, like I said, it's ranging from the economic hardship and the social inequality in the society. We've been also seeing a lot of riots as a reason of police brutality, for instance. Some events are predictable. Some, like events close to national or local elections, some are absolutely not predictable, like Chile or the Hong Kong protests. So I think there is really a variety of causes. And I would really like to stress the impact of COVID-19 and the role of social media in the riots.
Now, your report says, fortunately, large scale of terrorism events have declined drastically in the last 5 years. Well, I want to believe that's globally. But looking at Nigeria specifically, that has continued. Nigeria has continued to witness acts of terrorism and kidnapping, aside from the NSAS protest, of course, that we witnessed last year, and your report, of course, mentioned that. What is Alliance's assessment of Nigeria's environment as regards political and social disturbances?
Yeah, so that's a very valid point. That's correct, the fact that large-scale attacks have decreased overall, globally. But it is absolutely true that terrorism is still very high in the agenda of Nigeria. This is particularly true in the northeast region of the country, of course, with Boko Haram being active for more than a decade now. And our clients, and we've seen many events and different tactics, ranging from suicide bombs, car attacks, bombings, and you mentioned kidnappings, and that's true. Kidnapping is really high also in the agenda of our clients. So I think the best way for our clients to mitigate the risk is to get prepared, and this is only possible through business planning and having really a crisis management plans really at hand and rehearsed. This is also key in the conversation we have with our clients operating in Nigeria.
So what sectors are mainly exposed to these type of political and social violence, and why?
So over the past year, we've been really seeing retailers, so shops, really being exposed to the political violence in the concept of riots. If you zoom a bit more on Nigeria, I would say that our clients really operating in the oil and gas industry are the key targets for such attacks.
Now, what sort of implication do you see these social unrest having on insurance companies, particularly here in Nigeria?
Yeah, so just to give you some figures, globally, the consequences of the civil unrest may cost the insurance industry some billions of US dollars. And for us, it means that we need to assess perhaps better the risks. We need to assess better the range of premiums we're offering to our clients. But it also means that we need to give access to crisis management experts to our clients so as to mitigate the risks. So really, it's both a combination of being able to predict, being able to better assess the risks, and being able to give access to our clients to the best, security expert in the industry.
But how far do you think insurance cover can go in protecting businesses in times of upheaval?
Absolutely. I mean, we can protect our clients in a very wide range of periods, and it goes from terrorism till war and any escalation phase of such as sabotage, riots, revolution, rebellion, coup d'etat can be included in our insurance program. And I want to mention that you don't need to suffer direct physical damage to be impacted. I mean, your business income and the loss of earnings you can suffer as a result of riots is key. And it is absolutely something we're going to insure so that we help our clients to recover and get back on their feet as soon as possible.
Now, what kind of policies are in demand now against civil unrest for businesses?
Well, Chimizi, I can say that we receive each and every day hundreds of demands globally at Allianz because clients are looking for these political violence insurance policies, and covering the non-damage business interruption is something that is very key. So to answer your question, I would say that, yes, this kind of political violence insurance policies are really a high priority for our clients.
Okay, for you, are there better ways the government can help mitigate these risks?
Well, I think in that situation, the coordination with governments and any dialogue with law enforcement bodies are really helpful if you can have them beforehand. And it comes back to our point about business planning and having a pure crisis management plan well established and rehearsed.
Now, Doris, before I let you go, for how long do you think crisis will be at the top of your barometer, looking at what COVID-19 is doing presently?
Oh, I wish I had a straight answer to that question. I'd say at least for the next 2 years, because we will still experience the outcome of the COVID-19 crisis. So I would say in a short term, 2 years ahead, and probably more than a decade.
All right, thank you very much. We do appreciate your time, Doris.
Thank you.
Doris Pageant is a crisis management expert at Allianz. Commodities market update is next. Just stay with us.
All right, before we take the commodities update, this just in, President Buhari is currently presiding over a security meeting at the State House in Abuja. The meeting comes hours before the president's scheduled trip to the United Kingdom today for a routine medical checkup. Keep tracking that. Let's get the oil market update now. Oil prices fell this morning as shipping traffic resumed through the Suez Canal after days on hold, and attention switched to an OPEC Plus meeting this week where the extension of supply curbs may be on the table amid new coronavirus pandemic lockdowns. Brent crude is down 15 cents at $64.83 a barrel after gaining 0.6% on Monday. U.S. oil was down 1 cent at $61.55 a barrel, having fallen 1% in the previous session. Ships were moving through the Suez Canal again on Tuesday after tugs refloated the giant Ever Given container carrier, which had been blocking a narrow section of the passage for almost a week, causing a huge buildup of vessels around the waterway, with the likelihood what the disruption will prove minimal. The market is turning its focus on Thursday's meeting of the Organization of the Petroleum Exporting Countries and Allies, including Russia and Vienna, collectively known as OPEC+. They will discuss whether to keep in place curbs on outputs that have kept millions of barrels a day off the market to support prices, a strategy that has largely worked in recent months. Now, Dumebi Yeke joins us now, research analyst with financial derivatives company, to give us an update on the commodities market. Hello, Dumebi, great to have you.
Hi, Ladi. Good morning. Good morning, Chimizi.
Thank you for joining us. So,
thank you so much.
The Suez Canal blockade has been removed, allowing for free flow of merchandise. What does this mean for the global markets?
Definitely, there's the Suez Canal, there's the blockade, and we saw what happened with oil prices when that happened. The fact is this: the oil markets are very sensitive and extremely vulnerable to several happenings. And from the Suez Canal, what we've been able to see is that at least 1 million barrels of oil go through that route on a daily basis. Same thing with natural gas. So what this meant for the oil market was a decline in supply, which kept oil prices high. And on the news that the Suez Canal blockage was removed, we saw oil prices fall. And this is because supply of oil to the market is going to increase. So definitely what this means for the oil market is an increase in supply. And what this means is that we could see oil prices go lower again. As of this morning, it was about 62, 63. So we could see oil prices go down to $60 per barrel because of an increase in supply.
Well, aside from the oil market, generally the supply chain is also affected.
Yes.
And do you see that having some kind of inflationary impact on commodities?
Generally, there's been hot talks about another super cycle coming up, and this is because we've seen a surge in various commodity prices, copper, aluminium, even grains. We've seen their prices trend higher of recent due to an increase in demand, and this is because the global economy is recovering. And this has been supported largely with a reduction in the spike of COVID cases and an increase in vaccine rollouts. But nonetheless, what we'd likely see is that with this blockage, with the fact that it has been removed, and we're seeing oil prices go up, rather we're seeing oil prices go down, other commodity prices. Generally, I think there's going to be a mixed performance because, and this is not just going to be fueled by the Suez Canal being removed, but a couple of other factors in terms of the vaccine rollout, the stall in vaccine rollout, renewed lockdowns, some countries reopening, so a lot of all of these factors are going to play out the commodity price. And generally, I think it's going to be mixed on the global scale.
Well, Brent price has been volatile, but still above the 2021 oil price budget benchmark. Does this mean that Nigeria is safer from a possible oil price shock?
I mean, considering the fact that our oil price benchmark is $40 per barrel, I mean, what was shelved from some setting level of oil price shock, but at the same time, we also consider production. Nigeria is more oil production sensitive than oil price. So movement in oil price could, boost our external reserves to a certain level temporarily, could, give the government some form of cushion to support the Naira, rather the CBN to support the Naira. So we could see some of these things happen. By the end of the day, we also have to consider production. OPEC is meeting on Thursday. Should there be an increase in, should there be an ease in supply cuts? I mean, we're on the good end because at the end of the day, Nigeria is on the receiving end of this equation. But if there's another tightening, that means that our production quota could increase again, and it just simply means that Nigeria would have to reduce production again, and this puts us in a very sensitive spot.
So for you, what would be the major considerations at this meeting, and perhaps the possible outcome?
Yes, so the cartel right now is facing, number one, the China-Iran deal. We've heard over time that Iran wants to increase oil supply, and this is because they need that oil money to resuscitate their economy because of, the tensions that they have, plus the fact that they need the revenue to generally cushion the economy from the impact of the COVID-19 crisis. So there's a China-Iran deal that could, lead to a possible supply glut in the oil market. We also have the renewed lockdowns in Europe, which is a huge consuming region for oil. Germany recently renewed its lockdown. That's one of the top oil-consuming countries in Europe. We've seen that. And then we're seeing that there's still talks of a third wave of the coronavirus. That and the little issues regarding the vaccine rollout. So definitely the OPEC cartel is going to have to tussle with all of these issues and then come up with their own outcome for this particular meeting. At the same time, there's still some analysts fear the fact that there could be another deadlock between Saudi Arabia and Russia, and this is because there is that break-even point for every oil-producing country. Russia's break-even point is about $57 per barrel, so they are gaining at this point, but they want more.
And where would that leave Nigeria in the equation?
Generally, Nigeria's break-even point, according to S&P Global Platts, is $138 per barrel, meaning that for Nigeria's economy to actually grow faster than what it is growing now, and for us to have enough money to boost our economy at a very fast pace, it simply means that oil price would have to be $138 per barrel for that to happen for Nigeria.
Are we going to get there?
I mean, considering everything that is playing out now, earlier in the year when there was, a huge pump on and there was good hopes for oil price recovery, we saw several forecasts come out that oil prices could trade at $100 per barrel in the coming years. But with what we're seeing now, it's just fingers crossed at this point.
Okay, but still looking at oil, the NNPC has announced that it is retaining its ex-depot price until it settles with the NLC. What is the implication of this on the retail market for petrol, and how will it affect the Nigerian consumer?
So there is a Nigerian consumer, there is the NNPC and the NLC and the federal government, and there is also the investors. Now, when it comes to the deregulation of the downstream sector, we've seen so many things pop up, and all of this, affect investor pessimism, affect investor confidence rather. And when the reason for the deregulation of the downstream sector is so that oil prices or petrol price in general is cost reflective, meaning that the cost of these marketers, the cost of the NNPC, everything is reflected in the price of petrol. And it also means that there's a positive correlation between the global oil price and the retail price of petrol. And we've seen oil price go high to up to over $60 per barrel, meaning that it has to reflect in the domestic price of petrol. Now, the NNPC and NLC having conversations simply means that they're trying to shelve off some burden for the consumer. The NNPC also mentioned that they still pay about 120 billion naira monthly for fuel subsidy. Now, imagine that reflecting in the price of petrol. It means that we're looking at a retail price of petrol at about 200 naira or even above that. So for investors, looking at this deregulation dilemma, it's just keeping them on edge, in terms of investing in the downstream sector. That's on that side. Then for the consumer, it just simply means more cost for the Nigerian consumer,
So
which
the
is
burden
quite
is always shifted to
the consumer.
Is there a way out as it is now, both for the consumers and of course for investors? NNPC has said, look, we cannot continue with this subsidy.
Yeah. I mean, the truth of the matter remains that whether or not we like it, there has to be some reforms in the petroleum industry, in the downstream sector, so that we have substantial investments to boost that sector. But at the same time, we also have to consider the fact that the world is fast transitioning away from oil. We're moving to renewable energy. We're moving to electric vehicles. And we have to be forward-looking. That's just the honest truth. And till then, the Nigerian consumer would have to contend with higher oil, with
So
higher
what should the
petroleum
government
prices.
be investing in right now? Instead of
they're talking about
the
gas
refinery.
right now.
Okay,
Yes,
we're talking about gas.
there are talks on gas. Talks on gas rather. There are also talks on CNG and all of that. But definitely, we just have to go back to the drawing board to see how we can shelve off some cost for the Nigerian consumer, and at the same time improve on this reform so that we have substantial investment in this particular sector. Because at the end of the day, it's obvious that the revenue that we're getting is not enough to cushion and support some of these reforms. So there is that need for investment, and investors won't come if there's a lot of uncertainty in your economy, if there's high risk in your economy, especially in terms of doing business. So at the end of the day, it's just going back to the drawing board. How can we get more money to fund all of this and then shelve off some costs for the Nigerian
Now, in all
consumer?
of this, that brings us to the table of PIB. And one would wonder why, they're finding it difficult to pass this bill.
Generally, we've seen over time that the IOCs and the federal government, they've had, several talks on this PIB. And at the end of the day, when we look at the content of this PIB, the IOCs have their concerns. If these concerns are met, we have a very, very valid document that could support investment in this particular industry. At the end of the day, that's what the goal is, to increase investment in this particular industry and then improve oil refining, make sure that the IOCs are not paying so much for the production of oil and sales of oil, and just to make sure that everything is cost reflective. So at the end of the day, like I said, it's just investment, basically. It's just investment. And if this PIB happens, we've heard over time, we as of last year, when there were talks on the PIB passage and how that was going to affect it, we saw that there was good news, there was hope for investment in this particular sector. And this is because investors saw this as a good opportunity. Okay, it means that the Nigerian government is taking steps forward in terms of reforms. And at the end of the day, that just puts us in a very good position for good investments. And we also look at the fact that this also puts us in a good light in the international space. We've heard the IMF talk about it. We've heard the World Bank talk about it. So it just puts us in a good position if all of these reforms are good enough, if all of these reforms rather are being implemented, because implementation is always the most important thing. We can have good documents, have good policies, but implementation at the end of the day is the most important thing.
So what is your outlook for oil prices near term?
Right now, with everything we've seen, the China-Iran deal, OPEC Plus having their meeting, the first thing is that, number one, the outcome of the OPEC meeting is going to drive oil prices, the direction of oil prices in a very large scale. And with everything we're seeing, we could see oil prices just remain around $60 to $63 per barrel. And all of this is dependent on the OPEC meeting, because we're going to see sentiment surrounding various analysts coming up to say, okay, I think this is going to happen, I think this is going to happen, I think this is going to happen. And until we hear the outcome of the meeting, we're going to see all of that drive the price of oil.
Volatility.
Okay, exactly. Moving away from oil, we've seen global commodities prices surge in the past weeks. There are also talks about super cycle. So what does that mean for Nigerian market?
If there is another super cycle like what happened in the early 2000s when China, really boomed this industrial industry, if we see that happen, it just simply means that commodity prices are going to surge. Whether grains or aluminium or energy products are going to surge. And if this happens, we have to look at Nigeria's import and export bill. Now, Nigeria imports wheat, we import corn, we import refined petroleum products. Now, if the prices of these commodities increase, it simply means that Nigeria's import bill is going to increase, and this would definitely affect our export, our export earnings and our trade balance. So we could see another trade deficit. Nigeria record another trade deficit again, and this is going to be because our import bill is now outweighing or outpacing our export revenue.
Now, in this regard, a quick one before I let you go. See the global price of wheat currently trading above $600 per bushel. How does this affect the domestic commodities market? I mean, the CBN plans to reduce wheat import by 60%, that's by 2023. Can you talk us through the economics of this?
So the economics of this is import substitution. And import substitution is a situation when there's a policy or a trade policy that encourages more of local production as against buying external products, or as against importing. So this in itself is a good idea. I mean, we've seen China do this and have the success story from this. But at the same time, we also have to look at the current situation of local production in Nigeria. Is local production substantial enough to meet domestic need, and how much more now meets regional or even global needs, especially with the fact that AFTA has commenced. So at the end of the day, it's a good idea. But when we look at the dynamics playing out in domestic economy, can we successfully achieve this? So there's still a huge question mark there. And this just also boils down to the fact that there should be an increase in investment in the agricultural sector in terms of the value chain. Because right now, only investing in raw materials and all that, it's not going to do so much for us. And we also have to look at insecurity in the food belt. I mean, we're not only, wheat is a domestic, it's a staple, it's an agricultural commodity. So we look at the fact that it's produced in the northern parts of this country. And also Nigeria doesn't produce the wheat that is used for things that we love to eat, like bread, pasta, noodles. Nigeria produces hard wheat. And what is used for this particular commodity is soft wheat, and that's why we import it.
Thanks, Jumebi. Looking forward to seeing you again
Thank you so much.
on Thursday.
Yes, thank you.
All right, we'll take a moment. We'll be back. And let's look at the markets now. Well, a good start of the week for the equities, Eddie.
You're right. Hopefully this continues about till the end of the week or the end of the month. But the market was up 0.71% yesterday as we saw bargain buying on the shares of MTN Nigeria and GT Bank. But let's talk to Charles Fakuga, the Chief Operating Officer at Supra Commercial Trust, for more on what happened in the market yesterday. Good morning, Mr. Fakuga. Thank you for joining us on the program.
Thank you for having me.
So we saw really high activity on the shares of GT Bank. Yesterday, it contributed about 7 billion naira to the total trades. What's happening on GT Bank?
Yes, you know, from the earnings reports we sent to the market, investors were satisfied that GT has shown that they are the real leader in that sector in which they operate. So it was an issue of trying to pay them back for the dividend that they were paid. So it's on the back of that we saw more demand for the shares of GT Bank.
All right, Mr. Fakuga, so just before I let you go, what are the opening calls in the market today? And are those sentiments still positive?
Yes, the market is a little bit quiet, and the ASI is already positive, 0.05%. And of course, we've done the volume of about 470. So, well, I think looking at the trend, the market is looking positive. So we need to end the month of March in the positive growth. However, I always say it is not over until it is over. So we still have a lot of time, a lot of bargaining can still take place, and we can believe, obviously, for what we are seeing now.
All right, Mr. Fakuga, thank you for your input on the program. Charles Fakuga is the Chief Operating Officer at Super Commercial Trust Limited. So we'll just go over the market numbers now. We saw higher turnover of volume, value, and deals traded yesterday. Volume was higher by about 108%. We saw GT Bank adding 7 billion naira to the total 10.65 billion naira traded yesterday, and all of that was traded in 4,566 deals. Now, we saw sectoral performance was mostly positive, apart from industrial goods, which was due to the 0.44% on Dangote Cement yesterday. Oil and gas was also down yesterday. For the banking sector, we saw gains from GT Bank, from Zenith Bank, from ETI, and some other counters. The consumer goods was up 0.19%, and that was due to gains from Guinness and Cadbury, while the insurance sector was up 0.56%. The unlisted securities market was also positive yesterday, as the NSI rose 0.69% to 730.93 points, while the market cap was at 519.55 billion naira. We saw about 769,371 units worth 86 million naira traded in 12 deals. But quickly on the fixed income market, let's talk to Ramat to get an outlook of the week. Good morning, Ramat. Thank you for joining us on the program.
Good morning, Lady Young.
Well, what should we be expecting from the fixed income market this week?
Okay, so on the bond side, market has pretty much remained flat. Same thing on the treasury bill side. However, there is an NTB auction tomorrow, and at the last auction, stop rates were 2%, 3.5%, and 7% for the 91, 182, and 365 days tenors, respectively. General expectation is the 1 year might go slightly higher, especially given the fact that this week liquidity is expected to be tight this week because of the retail FX auction by the CBN. However, that remains to be seen, to be honest, because the DMO might try to manage rates, and we might just see markets still trading around same level.
All right, Ramat, thank you for your input on the program. Ramat Baba is the head of fixed income at FBN Quest Merchant Bank. But Chimi, we'll just have to keep our fingers crossed and hope that these positive sentiments in the market continue.
Yeah, we keep monitoring both markets and only hope for the best. All right, we'll take a break. When we come back, it will be time for our morning calls to London.
And for updates from London, Juliana joins us now. Great to have you, Juliana. Well, the Biden administration has warned it could slap 25% tariffs on British exports to the U.S. after the UK levied digital services tax on major technology companies. How are the authorities responding to this?
Good morning, Laddie. Well, yeah, the British government are definitely not happy about this. A spokesperson for Downing Street has described the potential threat as being unnecessary and completely severe. But this is a long-running debate that was first picked up during the Trump administration. In fact, it goes back to 2018 when the then Chancellor Philip Hammond said that, these tech companies that are making over £500 million a year, but £25 million a year European minimum in the UK must put more back in the pot, and they haven't been doing that. So they decided to slap on this 2% levy, not just the UK. There is France, Spain, Turkey. There are several other countries that have decided to do this. And the Biden administration have picked up from where the Trump administration left off and said, that they will potentially impose this 25% tariff, which will harm or at least add to the cost of exporting makeup, clothing goods, etc., etc. It's not a great story and definitely dents the relationship between Britain and America, which we know is a little bit strained because Biden has been no fan of Boris Johnson in the past.
That would definitely make things kind of tense. But regulators around the world are monitoring the collapse of U.S. hedge fund Archegos. What is the conversation about this in London?
The mood has slightly shifted, actually, even though we didn't see much of a rise, but there was certainly a rally in the banks at early trading. I think it does appear as if banks have shrugged this off. Well, certainly in Europe, we saw that their shares were all rallying a little bit higher overnight. I know Nomura, who was obviously one of the most exposed investment firms, their shares were trading lower in Japan. Also, Morgan Stanley fell down on Wall Street. But here in Britain, it does appear to have gone past the worst phase. I think really it's the question now about regulation in hedge funds. We know that banks have now been heavily regulated since the 2008 financial crisis. But now the question is, do hedge funds need the same amount of regulation? And I think the fallout of this is yes.
All right, let's get the morning calls. How have the markets started off the new trading day?
Yeah, it's a positive start on the blue chip index. It was trading 0.6% higher today. A lot of this is because of the Archegos capital has been shrugged off. And of course, we're seeing the evergreen is finally floating again. But closer to home domestically, it's all about the easing of restrictions. Yesterday was a happy day, very sunny in Britain. When it's sunny, everybody does swarm outside, including me. So lots of people happy in the park. And then we had some positive statements from Prime Minister Boris Johnson, who does appear to be confident in the roadmap out of lockdown. So now everybody is counting down to the reopening of non-essential hospitality and retail on the 12th of April.
All right, Juliana, always good to talk to you. Thanks for the update.
Thank you.
All right, let's look at what's happening in the crypto market. Hello, Ini. How's it going?
Hi, Laddie. Going on well. Good morning.
Good morning.
And, it's we have some good news coming from the crypto space. Market cap went up by 4.32% at 1.83 trillion naira. 24 volume was 131.51, and the dominance reduced just a little bit, so we don't need to worry so much at 59.05%. Well, I think we have Michael Wilfred is a crypto analyst to tell us about there's a news. Hello, good morning, Wilfred.
Good morning, Amy. It's a pleasure to be on with you this morning.
Same here, same here. So we're hearing that some public companies are investing part of their treasury in Bitcoin. Tell us about that.
Yeah, at this time, we have more than 30 publicly traded companies that are holding over $9.7 billion worth of Bitcoin on their balance sheet. And it's interesting because if you went back 12 months ago, there was no public company holding Bitcoin on their balance sheet. But because of the situation around the COVID-19 pandemic and the stimulus checks going out and the inflation in most countries, these companies have decided to risk the income that they make on fixed assets. Instead of getting 10% yield per annum, they are risking and investing their balance sheets on Bitcoin, which has traditionally yielded over 200% yield annually. So these companies are kind of giving outside investors exposure to Bitcoin because by simply holding the stocks of these companies, they are investing in Bitcoin as well. We are talking of the Teslas of this world, MicroStrategy, and Square. So these companies are holding a large portion of their balance sheets on Bitcoin, and it's making the market even more interesting.
Yeah, but Michael, I mean, we always talk about the volatility of this market. And what's the implication of this for these companies that have decided to put, their investments in this?
The thing there is this. They are sacrificing steady. They are sacrificing the steady yield that they are getting on fixed income assets for high volatility and higher yield as well. People traditionally view Bitcoin as a risky investment, but with these companies now that are holding Bitcoin on their balance sheet, these companies are not going to liquidate the market when the price drops by $5,000. Are probably going to hold for a long time, and it brings more stability to the market. So these companies are banking on their holdings being able to steady the market and also reduce volatility as much as possible.
Okay. So now for traders who make profit, how can they protect, their investments and their profits in the market?
Yeah, that's the tricky one because as humans, we naturally tend to be greedy. When you see a coin that you are holding going up, you want to hold on more so that you can make up to the last profit. But in order to protect profits, we need to fight that tendency to be greedy and maybe stop looking around for the next hot project to invest in because they are most likely.
Maybe it's not greed, Michael. It's just, you want to make money. Everybody wants to make money. Anyway, thank you so much, Wilfred Michael, for joining us this morning. Wilfred Michael is a crypto analyst, and he just gave us his own bit of it. Thank you so much for joining us. Well, just before I go back to Ladi and Chimi, Bitcoin price and Ethereum is doing well too. It added 7.41% and is now 1,800. In February, it hit its highest, which is about 1,900. Top alt, BNB. I learned the owner of ADA has said that it should get to $10 very soon. So maybe you should look out for that. Ladi, what
and I guess that's the greed talking there.
That's not a financial advice.
No, it's not a financial advice in any way.
Well, you're talking. Well, I guess it's for those who have that risk appetite.
Exactly.
But for someone like me, if I have to buy into any of these coins,
you need an
once
insurance
I
to
see
insure your
that gain, I'm going to cash out.
So you're not going to let greed get the better of you?
Not at all. Not at all.
Want to be one,
I'll have to cash out. I mean, yesterday you talked about ADA right now, and yesterday you talked about ZRX.
ZRX, yes.
These are the altcoins to look out for.
Yeah, they're definitely one to watch at this point.
Well, I guess that's not a financial advice.
Not financial advice.
And you invest at your own risk, as always. That's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.